Good afternoon and welcome to NYFP. In midday trade on this Tuesday afternoon, the major U.S. stock averages have pared back from earlier session weakness. Joining me now is Peter Cardillo of Rockwell Global Capital. Peter, good afternoon. Thanks for joining me today.
Good to be back.
Well, we're seeing quite a reversal in the U.S. equity markets. When we opened, the Dow was down by triple digits, and the U.S. stock market was also tracking global bourses lower. So it's all about central banks. So what do you make of the action that we saw?
Indeed, obviously, we saw the Bank of Japan actually disappoint, and that took the global markets down right across the board. And I suspect, that unfortunately, until we get some clarity on the Bank of Japan, I suspect this volatility is going to continue. In fact, I wouldn't be a bit surprised to see gyrations continue at levels that we have not been used to. And that means that, we're in for a confined trading range during the summer months, but nevertheless, with lots of volatility.
And we also saw a lot of fluctuation in the currency markets this morning, with the dollar-yen falling by as much as 2%. But there was also some focus on the Eurozone today. Over in the Eurozone, we had the constitutional hearing on the ECB's OMT program. When that meeting concludes tomorrow, what do you expect to hear out of that gathering?
I suspect that the German Constitutional Bank is going to uphold the fact that the ECB is staying within its mandate, and Mr. Draghi, made that very clear. So, a lot of noise out of the German bank. It's not the first time. They're ultra-conservative, and from time to time they can cause some havoc in the marketplace. But I don't really think that today's market action really stemmed from the hearings at the German bank, but rather than the Bank of Japan. And also another factor, we saw a spike up in interest rates. The 10-year yield Treasury bond moved slightly above that 225 level. So that's another reason to think that, panic selling is probably beginning to grip the Treasury markets, and that in turn is going to also increase volatility in the risk markets.
And Peter, the next time I talk to you, it'll be Friday afternoon. We'll have some more U.S. economic data releases on the U.S. Consumer, given that we get retail sales and consumer sentiment. How important will those figures be?
I think they'll be important, and I think they'll be consistent with slow growth. We look back at Friday's unemployment data, and we see that nothing has really changed. And in terms of economic activity, that means we have modest growth. And so, again, I think investors would be wise on buying the dips, even though, the market's probably going to be confined to a 2 to 3% trading range.